Inflation rate falls to 17.75% in June, just as Nigeria to borrow 4.8 trillion naira to finance 2022 budget. Nigeria hopeful of improved earnings from OPEC 1.8 million barrels per day revised allocation. Major Asian markets fall more than 1% as oil prices slip after OPEC and allies reach deal. External reserves dropped by $180 million in 2 weeks. This is Business Express and we are reaching you from Abuja, Nigeria's capital. I am Musa Abubakar. Now, latest figures obtained from the Central Bank of Nigeria shows that Nigeria's external reserves lost $180 million in 2 weeks. The reserves, which stood at $33.28 billion on July 1st, dropped to $33.09 billion as of July 12th before gaining slightly to rise to $33.1 billion on July 15th. The reserve lost $905.5 million in June after it fell to $33.32 billion at the end of June 30th from $34.23 billion on May 31st. Dollar surged near its highest levels in months on Monday as the spread of the Delta coronavirus variant made investors nervous about the global recovery and sent money into safety. Now, last week, the National Bureau of Statistics released the inflation figures for the month of June 2021. Headline inflation, the data shows that inflation dropped slightly for the third straight month to 17.75% in June from 17.93% in May based on a little slowdown in prices of food, non-alcoholic beverages. Food inflation stood at 21.83% in June 2021 compared to 22.28% in May 2021, while core inflation, which excludes the prices of volatile agricultural produce dropped from 13.15% recorded in May 2021 to 13.09% in June. The urban inflation rate increased by 18.35% year-on-year in June 2021 from 18.51% recorded in May 2021, while the rural inflation rate increased by 17.16% in June 2021 from 17.36% in May 2021. Now, attention today on the program is the slight drop in inflation as prices of food continue to rise and remain on the high side. Is there an end in sight? This is one question many Nigerians are asking. To answer this question and more is a professor of capital market, Uche Waduke. You're welcome to Business Express.
Thank you, Musa. My pleasure.
Okay, in Nigeria, it seems like when prices go up, it's always difficult for prices to actually come down. And people are worried. Is there an end in sight?
Well, I want to be optimistic. The 2021 budget is looking at inflation coming in at 11.95% by the end of the year. Although with the trend we are seeing, it does appear that that's rather ambitious. I also want to say that the marginal drop recorded in June, came against expectations because I know that a good number of analysts, had predicted that inflation rate, will resume the upward trajectory. But what we saw, according to the MBS, is still, a marginal drop in inflation. And I think MBS recognizes that, the fact that people are beginning to, question the number. People are beginning to, not to relate, not connect, with the number. And that's why in the report, for the first time, you find them now saying that it is not that prices are not increasing, but that they're not increasing at a rate that we saw previously. In other words, they're increasing at a slower rate. Well, it's interesting too to note that the pressure, has continued to come from the food component, from the food index, 21.83%. And looking at the figures generally, okay, the fact that the urban inflation is higher than what we have in the rural areas, the fact that inflation, if you disaggregate it, state-wise, it is highest in a state like Kogi and lowest in FCT, which is not far from Kogi. So if you put all that together, even though the report doesn't say that, what I tend to conclude is that inflation is not driven by demand, because if it were driven by demand, a place like Abuja, for example, will have high inflation rate. So it still goes to buttress the point that the central bank has made, over and over, that the factors driving inflation in the country today are non-monetary. Okay, there are more of infrastructural bottlenecks, such as transport, challenges. As I said, it explains why, for example, you have very high inflation rates in Kogi and low, in Abuja, and you have high in the urban areas and low in the rural areas. So transport bottlenecks, something to blame. Of course, we know the issue of insecurity. One cannot belabor that. That is fact, but that doesn't tell the whole story. Insecurity doesn't tell the whole story. Even before the insecurity became a challenge, okay, we've always had this, problem of rising inflation. So the issue of transport, the issue of even exchange rate, okay. And in fact, with the rising exchange rate, people had thought that the inflation figure for June, would be higher. So if you take all these factors into consideration, you will agree with me that even when I want to be optimistic.
Okay, let's look at the data now.
Yes.
The data shows a slight drop, but when you look at the reality in the market, it's something else. How do you marry the two?
Yeah, that's the point I was making. Okay. People beginning to question the number, not connecting with the number that the MBS is releasing. But to me, it speaks to the methodology of computing the consumer price index used by the National Bureau of Statistics. Okay, remember it is year on year. Year on year means it's computed as a movement in the price between this time, in the case of June, between June last year, 2020 and June this year. So if it was already high in June of the previous year, so if you are computing it for this year, you are likely to see the impact of that, reflecting, which is what we call the base effect. Okay, the base effect playing a role. But if you also want to look at what tends to reflect reality in those numbers, then you should look at the month-on-month performance. Okay. Because this MBS said that between May and June, month-on-month basis, that inflation rate actually increased by 1.06%. Okay, as opposed to 1.01, in the previous month. So month-on-month tends to now, reflect the reality, as opposed to year-on-year, which may have been impacted by the base effect.
Okay, the MBS has attributed the marginal drop in inflation to drop in food prices. And what other factors do you think contribute to that?
As I said, inflation in Nigeria today appears to be, the cost push type, as opposed to the demand pull type. These are the two major reasons we'll find in elementary economics. So it's more of cost push, and so the cost of input costs, are rising. Okay, input costs in relation to in transport costs, in relation to for imported items, especially for raw materials, for example, exchange rate is also feeding into the rise in inflation. So generally, I would say these are the factors that are shaping the inflation trajectory in the country, beside the issue of insecurity. That one is well known by, everybody. Insecurity that, is preventing farmers from going to farms. But again, as I said, even if you hold insecurity constant, it doesn't tell the whole story, because Zamfara State, for example, and Katsina States, two states with very high insecurity rates, are not experiencing the same rate of food inflation as Kogi. So that will tell you that there are other factors that are driving this insecurity beside inflation, beside insecurity. So if I were the governor of Kogi, for example, I would be worried that every month Kogi State keeps topping the list of states with a very high food inflation rate. So that would mean commissioning a study, for example, on why this is so, and because what that means is that when you have high rate of inflation in a particular state, all your good efforts at attracting investors into the state, will be thwarted, because every investor, of course, will be concerned about the positive, rate of return on investment. Okay,
is there nothing the government can do, maybe through Consumer Protection Council, to somehow regulate prices?
I don't subscribe to regulating prices. Yes, prices is about demand and supply. So the government hand should be invisible, in all of this, but the central bank should continue to focus on the interventions, targeted interventions. But I also want to advise here that if there is a way to also get the central bank to have these interventions done without being seen as doing interventions directly, even though there are participating banks, because when people get these loans, beneficiaries get these loans, because it's coming from the central bank, they may not see it as something that must be utilized and repaid. So government intervention, especially what the central bank is doing, is good. It can be scaled up. And I'm pretty sure if the interventions go more well targeted in the agri value chain, especially in processing and ensuring that we don't have post-harvest losses, warehousing and so on, I'm pretty sure that food inflation, which is the problem we are having, will come down with time.
It's actually Salah time. Salah again.
Yeah.
And it's mostly associated with people increasing.
Festive periods.
Yeah.
So we are likely to see the effect of that on the July inflation.
That's what.
Yes, July inflation rate.
So it's likely going to.
Yes. If it doesn't go up, I will be very surprised.
Okay. How and when do you think inflation in Nigeria can drop to single digit?
Well, if I look into the crystal ball, that would be sometime. It's not going to be this year at all, because even the government, if you look at the budget says 11.95%, and that's central bank has 6 to 9% band, 9% cap for inflation, but for a long time we've not attained that. So it's still going to be a long way from now, but we sustain them efforts, especially if the plan we have, I keep saying that the plan we have in the government economic program, especially with respect to agriculture, if those plans can be implemented, I'm optimistic that inflation rate will come down to below single digits.
International food prices also dropped for the first time in 12 months, as captured in the Food and Agriculture Organization Food Price Index. Is it a global trend?
Well, we have seen that in case of Nigeria is a departure, a departure from that, again, on account of the exchange rate. Okay, once if the exchange rate is high, you are bound to, if you are doing import, you are bound to be importing, at a very high price. And of course, you want, as an importer, you want to also include that in the, you pass on that to the consumer. Okay, so the concern for us, should be what is happening, domestically, how we can, grow production, because it's also about supply. Okay, it's about supply. It's also about reducing the input costs, which is why I talked about this issue of logistics, transport infrastructure. And if you look at the risks in the horizon, they seem to be quite high. If you factor in the likely increase in petroleum pump price of fuel, okay, electricity tariffs, exchange rate unification, and so on. So the picture, okay, I'm just afraid to say it's not something that will ease off pretty soon.
Okay, thank you very much, Uche Nwaleke, Professor of Capital Market.
My pleasure, Musa.
Thank you. Now, the 9th OPEC and non-OPEC ministerial meeting held via video conference on Sunday, 18 July 2021, noted that ongoing strengthening of market fundamentals, with oil demand showing clear signs of improvement and OECD stocks falling as the economic recovery continue in most parts of the world with the help of accelerating vaccination programs. The meeting welcomed the positive performance of participating countries in the declaration of cooperation with overall conformity to the production adjustments in June was 113%, reinforcing the trend of high conformity by participating countries. Leader Samson reports.
The meeting resolved that in view of the current oil market fundamentals and the consensus on its outlook, OPEC has decided to adjust upward overall production by 0.4 million barrels per day on a monthly basis starting August 2021 up till phasing out of the 5.8 million barrels per day production adjustment. In December 2021, the organization will assess market developments and participating countries' performance. OPEC reaffirmed the framework of Declaration of Cooperation signed on the 10th of December 2016 and further endorsed in the subsequent meetings, including 12th April 2020. OPEC is extending the decision of the 10th OPEC and non-OPEC ministerial meeting held April 2020 until the 31st of December 2022. OPEC is resolved to continue to adhere to the mechanism to hold monthly OPEC and non-OPEC ministerial meetings for the entire duration of the Declaration of Cooperation to assess market conditions and decide on production level adjustments for the following month, endeavoring to end the production adjustment by the end of September 2022, subject to market conditions. OPEC will adjust effective 1st May 2022 the baseline for the calculation of production adjustments. The organization reiterates the critical importance of adhering to full conformity and taking advantage of extension of compensation period until the end of September 2021. Compensation plans should be submitted in accordance with the statement of the 15th OPEC and non-OPEC ministerial meeting. OPEC is to hold the 20th OPEC and non-OPEC ministerial meeting on the 1st of September 2021.
The gold prices edged higher on Monday as a fall in U.S. Treasury yields and concerns over a global economic recovery slowdown due to the spread of the Delta variant of the coronavirus lifted demand for the safe haven metal. Let's join Muplan Dakok for a review of market activities on the Nigerian stock market for last week.
Market reports for the week ended July 16th shows that the market decreased by 0.12% to close the week at 37,947.18, with market capitalization at 19.771 trillion naira. Investors lost about 25 billion naira, which was caused by mixed trading sessions. A total turnover of 1 billion shares worth 10.9 billion naira in 17,297 deals were traded in the week by investors on the floor of the exchange. All indices finished lower with the exception of the NGX Banking, NGX AfriDiv Yield, NGX Merry Growth, NGX Oil and Gas, and NGX Sovereign Bond indices, while the NGX Premium, NGX ASEM, and NGX Growth indices closed flat. The financial services industry led the activity chart with 732.4 million shares, valued at 7.2 billion naira, traded in 9,131 deals. The conglomerates industry followed with 52.9 million shares, worth 170.2 million naira in 665 deals, while the third place was occupied by the ICT industry. Trading in the top three equities Guaranty Trust Holding Company, United Bank for Africa, and Zenith Bank accounted for 261.7 million shares worth 5.8 billion naira in 3,498 deals.
Stock resumed the week positive as the market positions for the Salah holiday, sustaining gains made in Friday's session. At the end of the day's session, the all-share index settled at 37,952.65 basis point, 462.8 million shares valued at 1.1 billion naira, exchange hands in 3,610 deals, while equity capitalization settled at 19.7 trillion naira. The market closes Tuesday and Wednesday for the public holidays. The banking industry dominated activities led by Jaiz Bank, Sterling Bank, and Wema Bank. Now, major Asia markets fall more than 1% as oil prices slip after OPEC and allies reach deal. Bosede Abel reports.
Hello and welcome to the Global Market Review segment. OPEC and its allies have reportedly reached a deal on Sunday to phase out 5.8 million barrels per day of oil production cuts by September 2022. This, however, affected the performance of most global stocks negatively in Monday's trading. Shares in Asia Pacific slipped. In Hong Kong, the Hang Seng Index led losses among the region's major markets, closing 1.84% at 27,489.78. Shanghai Composite dipped 0.01% at 3,539.12, while Nikkei depreciated 1.25% to close 27,652.74. European market followed their counterparts in Asia Pacific to trade lower at the start of the session and continue to brood on inflation and rising COVID-19 cases. DAX dipped 1.96%, FTSE 1.95%, and CAC 40 also depreciated 2.01% at 6,331.26. In Monday's trading, U.S. stock index futures fell on concerns of the rebound in COVID-19 cases and would slow global economic growth. Futures contracts tied to the Dow Jones Industrial Average dipped 0.86% at 34,687.85. S&P 500 depreciated 0.75%, and Nasdaq Composite also dropped 0.8%. While in Africa, stocks are also mostly negative. South Africa's JSE Africa Top 40, Namibia's overall index, Nairobi's all-share, and Ghana's GSA Composites were negative, while Tunisia's Tuniday stopped 0.08% at 7,271.94. That's the Global Market Review segment.
Well, that wraps this edition of Business Express. Remember to keep in touch with us. Do send in your comments, observations, and suggestions. Idil Kabir.